Simon agreed to do this a couple of weeks ago very kindly, and we were really looking to put a session on, just show people what was available in these kind of very strange times. We know it's been a really difficult time for a lot of our members and a lot of the dairy farming and farming community. So Simon's very kindly offered to do this for us. Simon graduated from Harper Adams. He's been running his own rural business advisory firm for 8 years now, working mainly across the Northwest, specialising in rural grant applications, farm business appraisals and development, agricultural policy and strategic advice. He's a fellow of the Central Association of Agricultural Valuers and a member of the Institute of Agricultural Management. He's also a partner in 3 other companies operating across the rural industry, looking at social media, digital media publishing and conference event management, as well as being a visiting lecturer at the Royal Agricultural University. So I'll pass on over to Simon to run through the presentation. Like I say, any questions, please put them in the chat. And thank you all for joining us.
Thank you, Emily. So just wanted to check that you could definitely see my screen and the presentation slides.
Yeah.
Yeah, perfect. Okay, so I'll kick off. Thank you everyone for joining me and joining us for the next half an hour. I will keep to time. We've got about 25 slides, so I'm not going to dwell on any of them in too great a detail. This webinar is more about giving you a flavour of what's out there, making sure that you're aware of various opportunities and funding sources, and that you've got links to then go and explore them further. Some things you might be aware of, some things you might not have been aware of, some things you might think, oh, I've never thought about that before, that I would be eligible for that. So that's the point of today's webinar. So we're going to have half an hour of me running through some slides, and then I'm more than happy to stay on for any questions, whether there's 1 or 100, doesn't matter, throw them at me. I'll try and see what I can do. If I know the answer, I'll answer it. If not, I'll give a politician's answer. So firstly, just to kind of overview what we're going to do, as I say, run through some of the range of grants and funding sources available. Also want to try and give a flavour of us thinking outside the box in accessing that financial assistance. So what do we might need to be a bit more savvy about? What might we need to try and take ourselves subjectively out of that business to really objectively look at areas of efficiency that we could improve upon, or things that may be right under your nose that you've not considered from a different angle. I also then want to talk a little bit about the agriculture bill, the new environmental land management scheme coming down the line in a few years, and this whole aspect of business sustainability, really pinpointing and addressing those key factors then of risk, resilience and revenue, and explaining why they are so important for your day-to-day management of your business. And as I said, just really for the next half of us, just trying to be more savvy of how we tap into some of those funds. So let's kick off then straight away. So just wanted to give a bit of industry context before we go too further. This is data that's been taken from the DEFRA Farm Business Survey 2019 to 20, so hot off the press figures. As you can see there, we've got a graph that's showing all range of different farming sectors, everything from cereals through to dairy, through to specialist pigs and horticulture. So this is profitability by income base and sector. Now, obviously this webinar is focused on dairy, so I just really wanted to highlight the third one along, the dairy one, which says average income per farm 79,700. But as you can see from there, if that's the average, as you can see, the proportion that the basic payment scheme forms as part of that. So looking down the line to 2025, really when we're kind of a bit more unsure of what the current support is going to be via the government, that's really when we need to be thinking, right, we've got a 5-year wind down to this point. How are we going to replace that figure? We know the same level of funding across the industry is going to be available for the next 5 years. We know that the basic payment scheme is going to start to be cut or reduced from 2021 onwards. It will be available in different pots and different forms up until 2025. But 5 years from now, what are we going to do? What's your business going to do to try and replace that income if, when we get to 2027, it falls off a cliff edge and is no longer there. So obviously trying to enhance the dark blue part of that part of the graph, looking at dairy, which is really focused on the income coming from your agricultural elements of your business, which obviously is milk sales, young stock sales, culls, you know, everything that's coming from you operating that dairy enterprise. That's really what we're trying to enhance and to make more resilient. Liabilities, obviously, when we look at distribution of liabilities per farm and by farm type, we can see there that dairy is disproportionately weighted to having more debt and more liability. And that's easy to understand, really, in terms of, you know, if you've got, you know, quite a few head of cows on the holding, you've got, you know, a certain amount of land, you've got different holdings or different land areas and parcels in different areas, you've got a lot of machinery on HP, you've got a lot of bank debt, you know, you've taken out loans or mortgages to try and grow and develop and take on the farm and take it further. You know, that's nothing to be too worried about or play it out as too significant. We'd expect to see that for dairy, but the key point I wanted to make there, though, is if your business is falling into one of those brackets where it's more heavily geared to trying to repay that debt, obviously when we've got shocks in the system and things that are outside of your control, such as the weather, such as politics and regulation and COVID as a really good example, how resilient is your business to be able to you know, take on and recover from those shocks, as well as still trying to operate your main business and repay debt and, you know, any interest repayments and other finance agreements that go along with that. So if we can get the core business running properly and efficiently, we've got a better chance then of looking at other grants and alternative income to try and support alongside. And if we have a real focus on profitability, thinking, okay, there's two ways to make profit, not just chasing turnover, but also factoring on costs as well and trying to reduce those and operate as a lower cost base as possible wherever we can. Suddenly we can see how there's that gap then between the top 25% and the bottom 25% of businesses. It's not simply you know, the pence per litre that they receive by way of your milk contract, although that will play a significant part. But if we can focus on efficiencies and driving down costs as well, and really understanding what that cost of production basis is, where you should be able to quote to, let's say, 2, 3, 4 decimal places what your costs of production are pence per litre, as well as you could in terms of the milk price that you receive, then our focus and our mindset is really on point there. It's about the margin, you know, not necessarily always the yield. So really understanding the cost of production, not just on a gross margin, but also a net margin basis. So we're looking at some of these other sources as bonuses, as payments that can help alongside the business rather than prop up the fundamental existing business. You can see that's taken from an AHDB report last year, and as it says, contract, location, succession management, all key factors that will impinge on that. But really, cost of production is what I want you to take away from that slide, and always putting a focus on that more than anything. So let's just take a step back then and think what grants might be available that some of you guys can access at this current point in time. Obviously, we've heard about this COVID-19 dairy fund that's supposedly coming down the line. We haven't seen any more detail. There's nothing to apply for as of yet. But, you know, if you've only had, you know, let's say a couple of pennies reduction, rather than losing 25% of your income, unfortunately, it's one of those schemes that the RPA comes up with that, you know, is shown on a PR basis as being available for all, but is only going to be available really for a small proportion of that sector that have been fundamentally affected, you know, where you've lost up to 70% of that income in that period, because, you know, you've dropped from 26p down to 16p, for example. Those of you who are affected, you know, whether it's just for a month or for a past couple of months, and you've had 2, 3, 4 penny reductions, unfortunately that might just be outside of your reach, which is obviously not helpful when you've got the press saying one thing, but potentially you're sat there thinking, I can't actually access any of these funds that are supposedly right there dangling in front of my eyes, but just a bit out of reach. So let's assume that might not be applicable then. For some of you it will be, and it will be a welcome help, although £10,000, to be fair, isn't going to go too far, I would suggest, especially if you've been affected quite significantly with that price drop. But it'll be something that can help, so let's not ignore something that's available there anyway. The Countryside Stewardship Scheme, though, this is where we might need to think outside of the box. Okay, so this has been available since 2016. I have clients who are now in year 5 of their Countryside Stewardship Scheme agreement and are looking to go again. Let's face it, it's not as easy as the old environmental stewardship schemes to get into, but then again, why should it be? You know, these things are competitive. They're there to kind of, you know, tease out the people who actually do want to be part of these schemes. And you've just got to look at it with a little bit of a left field view, rather than thinking, bloody hell, doesn't sound like food production when we're thinking about stewardship. I'm not, you know, putting my land down to wildflowers or birds or bees or butterflies or whatever. Get that mentality out of your mind and think, okay, where am I in England by being part of either a high priority water targeting area or a medium priority? That depends on your postcode. That will then send you down lines of being able to access grants to claim against concreting works, roofing works, new tracks, guttering, fencing, hedging, stonewalling, all of these capital items. If you're going to incur cost against some of those things over the next 2 to 5 years, you should really be taking a second look, I would suggest, at the Countryside Stewardship Scheme. The costs of that DEFRA have put against some of these items will normally cover 80 to 100% to reimburse you for the cost of that item. And I would challenge anyone, I would say, on the call to tell me that they couldn't do with at least £10,000 of funding per year to improve infrastructure and works across their holding, whether it's tracks, whether it's fencing, whether it's hedging, whatever. As I say, it's very much a postcode basis. You're either in the high priority area or you're not. And then it will send you down 2 streams, whether you think, let's go for a 2-year capital grant, or let's go down the route of a 5-year mid-tier scheme. The difference between the two is that if you want over £10,000, you've got to go down the 5-year route. However, key difference from the last stewardship scheme is that you don't have to put your whole farm into a scheme. It is just on selected parcels. So potentially you could put half the farm in this year into a scheme and half the farm next year into a scheme. Or like some of my clients, you could go for a 2-year capital grant for £10,000 of works. That work done in the first 12 months of the agreement, claim the money back, request for the scheme to be closed down, and then go again. And then suddenly you've had 50 grand over 5 years without ever being part of the 5-year scheme. It's just being more clever and saying, you know, okay, I know it sounds like more paperwork and jumping through hoops, but there's a way around this. We can still farm as we want to farm, doing what we want to do on the land without being forced to tick a load of boxes and jump through a load of hoops and sign up to a load of paperwork. What do we actually want out of it? Do we want capital grant payments? Do we want to manage our land, whether that's existing hedgerows that we're looking after, areas of grassland that you might be putting low fertiliser inputs on. It might be arable areas that we might want to be looking to put into winter cover cropping or overwintered stubbles, for example. Suddenly we then open up the possibility of looking at these schemes more as an alternative gross margin rather than just an alternative income. So if you can think of Countryside Stewardship as a separate enterprise on your farm, it will suddenly stack up a lot better as to why you might need to jump through some hoops, especially as that revenue payment might be something in 5 years' time when NELMS comes along and replaces BPS and stewardship that you're already au fait with. You understand how the scheme works, you understand the rhetoric, you understand the direction the government's wanting to push you in. Please don't be one of those people, you know, who are still saying, oh, is the grants for drainage or putting buildings up? Well, there were years and years ago, but that's not the current focus of DEFRA at the moment. You know, don't wait 5 years and then think, right, I'm going to get some grants for fencing or concreting or tracks or any of the other 244 options and items on that Countryside Stewardship Handbook, because they might not be available. The focus might have shifted. It might be all airborne, it might be water focused, it might be soil focused. So it's something to take advantage of now, I would suggest. The Countryside Productivity Scheme, those of you who were successful in round 2 last autumn, obviously you've had another couple of months grace to get those capital claims sorted before the 31st of July. And we have been told that there's a round 3 coming down the line. Now, whether that comes out in August and September later this year, as it has done for the past couple of years, or whether it's pushed a little bit further down to time with the autumn budget or the start of 2021, is awaited to be seen. But this again, 40%. My view on grants is you should only be really going for a grant if it's something that you were going for anyway. It's expenditure you are going to incur in the next couple of years. It's something that you've previously talked about that could help your business. If you go off chasing grants for the sake of it, especially as a dairy business, you're going to take your eye off the ball of the main source of income, which is how efficiently can you produce milk on your farm. So have a look at the Countryside Productivity Scheme when it comes out, hopefully later in the year. I think there was about 70 or 80 different items. You don't need to get 3 quotes. It's simply if the item's on the handbook, you should be able to put it on your application, and you know, whether it's GPS system or whether it's a handling system or a crush or weighing scales or anything else that's on that handbook, it's then up to you to go and purchase it and claim it back against your agreement. But it's very straightforward that to apply for. I know we're really focusing on England for this presentation, but if you are the other side of the border, now they have grants under the Scottish Farm Advisory Service that you can use to help pay to put a land management framework plan in place. This might be something that gives us a good steer about what NELMs might want us to do in 4 or 5 years' time. Unfortunately, there's nothing at the moment similar this side of the border in England. But for those of you who have businesses North Cumbria and over the border, it might be something that you could access from the Scottish Rural Development Programme as well. So if we're saying what grants are out there right now for you as a dairy business to take advantage of in 2020, it's those 3 mainly. It's the COVID-19 Dairy Fund, it's the Countryside Stewardship Scheme, and it's the small grant Countryside Productivity Scheme. Okay, what about then other opportunities alongside that? Something you might not have heard of, something that can run concurrent, you know, whether you're a younger farmer or it's something where your business is seeking out new opportunities and perhaps alternative ways of bringing income on the farm. So I've just put 4 there that might be something to flag. The Farming Ambition Programme is a joint programme run and administered via the Farmer Network in the north of England, but also in conjunction with H&H and Enterprise Answers. If you are a younger farmer, that might be something to go and investigate. It is not a young farmer grant per se, but it is a programme where certainly you could access some funding to help you with any plans or new enterprises and ideas that you've got down the line. The Prince's Farm Resilience Programme is something similar. Go and investigate that as well. That might be worth you know, a couple of minutes of your time clicking through to that link to see what the eligibility for that is. The Henry Plumb Foundation, I've previously benefited from that in the past by going to a leadership course, and it paid half of the cost of that. Lord Plumb, ex-NFU president, ex-European Council president, just recently retired from the House of Lords in his mid-90s, set up 5 years ago a foundation, a fund, where he would offer up to £3,000, £4,000, £5,000 to younger farmers who wanted to go and travel, wanted to go on a leadership course, wanted to purchase some of their own animals or put a business plan in place or pay for professional fees to explore new ideas and opportunities. But also, and key alongside that, offers mentorship as well from other individuals across the sector and across the industry. So funding in one hand and mentorship in the other hand, perfect, you know, whether you use that for 12, 18, 24, 36 months, something where you are wanting some support, wanting some outside help or guidance, and also there's a bit of a financial cost to it as well. The next application date for that is the start of September. So that might be something to go and work up over summer and try your arm down that line. Now, Made Smarter then is slightly left field and different again. It is a program that's currently running across the Northwest, those Northwest counties at the moment as a pilot program. It's very much focused on manufacturing. So if you have a dairy business that might be adding value in some way to your primary product by way of cheese or ice cream or yogurt or anything else, Made Smarter focuses on the manufacturing elements of that enterprise and idea. And as much about trying to incorporate new technology into your business, they're also as keen to retrofit new tech onto existing equipment. So if you have a lot of data that might be being not captured or you haven't realized at the moment, if you could benefit from putting a robotic element into your processing arm or chain, or something where you might want some outside help, whether it's just taking on a couple of apprentices, or maybe it's getting advice about intellectual property, or putting some contracts in place, something where you need the outside R&D scientific or technical assistance, Made Smarter is definitely worth exploring as an avenue there. A little bit further afield than that then, so now we're focusing more on personal and continued professional development. What about maybe applying for some of these courses? So this is really focusing on you within your business. So we're not thinking about the cows, we're not thinking about the milk price, we're not thinking about any buildings or any land asset, we're thinking about your personal asset. The asset that is probably not thought about too much, maybe undervalued within your farm or family business, but really how can you enhance your skills and your growth and development so you can be more prepared when there are shocks coming down the line. You can take that objective view about your business and maybe think about it in a different way. Nuffield Farming Scholarships, you've got until the end of July to apply for. There's 2 leadership courses run by the Worshipful Company of Farmers. I believe they have been postponed for 2021. Sorry, so the next time they will run is November 2021 and January 2022. So they've been delayed by 12 months, but they're still open for application. The Institute of Agricultural Management Leadership course is run every other year. So that was run earlier this year, so that won't happen again until 2022 anyway. But also there's a farm management skills program that they run, which is done in the autumn, winter time, a set of 6 to 8 modules, all about, you know, as I say, enhancing personal and professional development, whether it's negotiation skills, marketing, finance, you know, understanding your business better. Some of those might be well worth, you know, a week, a couple of weeks, you know, or a day of your time just to try and enhance and build upon what you've got and take it further. So, you know, we've had grants that are available for your business to apply for, opportunities that might be available for your wider business aspects, and then also opportunities for personal and professional development. That's kind of a key focus on grants. What I want to do now is shift the focus to think about how your business could access some of the other funding sources available at the moment. Oliver McIntyre, who kindly put me up for this webinar, I think has paid back for me asking him to contribute to a guest lecture session at the Royal Agricultural University. I've nicked this slide from one of his that he shared. When the banks are assessing your business or looking at proposals for new lending or just wanting to understand the risk and resilience and how efficient and how well you can cope, they're gonna refer back to this as an acronym. It might be different for different banks, but effectively, if you ever hear the acronym CAMPARI, it covers these main areas of character, ability, management, purpose, amount, repayment, and insurance. So whenever you're writing a business plan, whenever you're putting a set of figures together, try and relate it back all the time to these 7 key areas here. It's not just that the serviceability or the bottom line could, you know, and gives the impression that the business can repay debt. They're also looking at the character of the people involved in the business. So linking it back into some of those leadership and development courses, they're looking at the whole business, including you as a person and those family and other business members. What is your character? What is your ability? How well are you able to manage people and to manage business and to manage shocks? What's the purpose? Do you have a plan? What should those outputs and outcomes be? Rather than just thinking, as long as the figures are right, and you know we've got £1 million on our asset balance sheet, you know, we only want to borrow 100,000. What's the problem? This should be signed off, you know, without even a second thought. It's not as easy as that anymore. And why should it be? You know, banks are wanting to support businesses that have a plan, that really know where they're going. So you want to be focusing on all of those elements in equal proportion. What about some of the COVID-19 finance support available at the moment then? So one you might have heard of, but maybe dismissed straight away or thought this is not for you. And I really wanted to just spend a minute or so exploring further, is the bounce back loan scheme. So this is for businesses to apply for who could access between £2,000 and £50,000. It's capped at 25% of your turnover for the calendar year 2019, or if you're a new business, it's up for you to estimate that. There's no early repayment charges. You don't have to pay anything back for the first 12 months, either capital or interest. It's government-backed guarantee, and it's 2.5% interest once you do start making those repayments. Now, as I've said there, it is definitely a courtesy to make your existing bank relationship manager aware if you're going to apply, because you don't necessarily need to let them know. You know, it's a very simple process. It'll take you about 15 minutes, certainly no more than that, and the money's in your bank within a couple of working days if you're successful and it's straightforward. But why might we want to take this? Well, if you want to repay existing debt that you're paying at a higher interest rate, if you've got works lined up, such as you know, anything that might fall under a Countryside Stewardship Scheme or a Countryside Productivity Scheme, other work and plans that you've got to grow and develop your business over the next 12 months, this could be a really good opportunity to go and grab a lump of money to help finance that without it affecting your existing debt or asset sheet or balance sheet position. But more than anything, it's going to help your cash flow. You know, at the moment, a lot of businesses are suffering because either, you know, that income's down, bills aren't getting paid, cash is being affected. That then filters down in terms of being able to pay employees and other suppliers. If this £50,000 can be gone and applied for, or anything up to that level, to help your cash flow, to help pay for capital expenditure, to help your business survive and then thrive a little bit further down the line, hopefully once all this has subsided, it might be a really good opportunity. Obviously, one thing to stress though, it is a loan. It is not a grant. You cannot get £50,000 and then forget about it. That will need to be repaid at some point. So if you're going to go and get 50k or anything up to that amount, that falls into your bank account. Your bank manager suddenly goes, oh, where's this 50k come from? He's going to be thinking, well, hang on a second, how's this going to be repaid? Because shouldn't they have actually asked for maybe a temporary overdraft limit? Or should we not be actually looking at the existing debt portfolio and trying to restructure some of that? So have a think about how that could help your cash flow, but it's certainly not a grant. It is a loan that needs to be paid back at some point. Now, the difference between the bounce back loan scheme and the larger coronavirus business interruption loan scheme, you know, on a very simple basis, one is for 50k and under, one is for 50k and over. I'm not going to do death by PowerPoint and read through this slide or the next. Emily has a copy of these slides, and I'm more than happy for her to forward them on to anyone who wants a copy afterwards, and click through on the links for all of these things as well. But certainly the bounce back loan scheme is a lot easier to apply and access at this current time, and might be something that would help your business out at more of a short-term cash flow position. So there's the links for those two, the bounce back loan scheme and the CBIL scheme. Thinking, let's say, outside the box again, how else could your business be supported at this moment in time? Well, obviously a key one is that you could actually defer any VAT payment that is currently due, whether you're doing your VAT monthly or quarterly. But for example, if you've got a VAT payment that's due, the start of June or the start of July, you could ask for that to be deferred, and then you have until the 31st of March 2021 to actually catch up with that. So obviously, if you know you've got a lot of VAT, a big VAT bill to pay, again, that's affecting your cash position, the cash flow element of your business. It might be worth looking at maybe deferring that to assist. I've put Enterprise Answers there as a link. That is I think it's one of the only 2 rural community funded kind of development institutions. They offer loans. They are a form of bank, but not necessarily a high street bank in that respect. It's an alternative source of accessing that finance if your high street main bank or challenger bank, for whatever reason, isn't able to support or doesn't have the capacity at the moment. Perhaps have a look at Enterprise Answers to think it's a different way to potentially access some of that funding, of which family businesses, food and drink, and agriculture are three of their key sectors that they're really putting focus on at the moment. What about some of those other funds then that are available that you might have heard of but are not quite sure if they're applicable? If your business is paying business rates, and now this should be something that your local authority is contacting you about, that they will give you a year's grace, I believe, on paying those business rates. You could also access either a grant out of the Small Business Grant Fund or the Retail, Hospitality and Leisure Grant Fund. Especially worth considering if you haven't already, if let's say you are a dairy business that has a couple of holiday cottages or let properties that you're offering to the tourist sector. Again, your local authority should have got in touch, but if they haven't, it's definitely worth chasing up, because if you've got anywhere between £10,000 to £25,000 that you could access as a grant, that will help, because you've had to close and those bookings, for the last 3 months haven't been coming in. No one's visiting over the summer. And you might be thinking, gosh, we'll do well to break even here. That's obviously a couple of funds that might help by way of grants that way. Also, what about time to pay arrangements with HMRC? The key point is, if you are struggling to repay bills or debt or to meet those requirements, whether it's through your bank, HMRC or other, even those suppliers that you owe money to, those creditors, get in touch with them. People are more than happy to hear from you and put a plan into place, rather than you to be silent and to worry and to stress yourself out thinking you can't repay them. What about something different then? The Self-Employment Income Support Scheme. This is definitely available for both those sole traders, if you consider yourself self-employed that way, and or for people who are part of a partnership in that business. So you can claim if you're a self-employed individual or member of a partnership. As you can see there, the different rates and the amounts that it's capped at. I'm not going to do death by PowerPoint again, but certainly if you have not yet been made aware of this, and I would suggest that's probably your accountant, who should be getting in touch with you and saying, hey, look, shall we have a look at this? We might be able to benefit. That's obviously one of the routes, alongside the job retention scheme, that the government has offered to be able to pay up to 80% of that income for a particular month, capped at a certain rate. So have a look at the Self-Employment Income Support Scheme. As I say, we've also got the job retention scheme, which is primarily for employees. And obviously that's where this word furlough has come from. If people have been furloughed, they've been furloughed through the job retention scheme. Again, the government's paying 80% of that wage up to a certain amount. Limited company directors are also eligible. Obviously, if you've been paid through PAYE, but are also claiming dividends as well, it won't cover the dividend aspect. And obviously you are limited to what you can do by way of activity for your business to keep it going, which is mainly just administrative duties. But even so, if there's scope to claim some of those wages back through those schemes, every little helps. It's better than nothing. And I think that's the whole point of this of this presentation. There might not be something that is the magic silver bullet. You know, there's that tree in the corner that's dropping £5 notes every time you shake it. You might have to go and think, okay, well, if we can save £100 here, if we can knock £1,000 off there, if we can improve this by 1, 3, 5%, all of these little and smaller things will add up and help your business overall, rather than there being one magic figure or one magic grant that's suddenly going to solve all your problems. So in the same way, have a look at those links about claiming back some of that statutory sick pay. You know, if you've had employees that had to self-isolate for a couple of weeks because they had coronavirus or they thought they might have had those symptoms, or also if you want to have a look at, you know, same as deferring some of those VAT payments, you know, deferral of the self-assessment payments as well that are due. These are all things that you should be either talking with your accountant about, or they should have already contacted you or your consultant or whichever professional you involve within your business to perform that role. Have a look through each of these. I always say being clued up about it is one thing, sticking your head in the sand about it and then complaining is something completely different. Spend 5 minutes, half an hour, an hour, just having a look at some of this guidance, think about whether you might be eligible, raise it with your trusted professional, ask the question. If you don't ask the question, you won't know, but it might be some small little things around the edges that will really help your business. So kind of, that's the grants and funding sources. What about the other stuff then? Hopefully everyone's still okay on the call. I'll try and finish, Emily, in the next 10 minutes or so. It's just too many good stuff to talk about, really, though. But for me, there's 4 stages of development and growth within your business. I went to see a talk by Doug Avery last autumn, a farmer from New Zealand, talking about mental health, and I've kind of nicked his 4 zones here, but also then applied them to elements that I think the businesses should be really concentrating on. So we all have our natural comfort zone, obviously. However, if we never want to take a step outside of that and think, no, I'm happy with what I'm doing, this is for me, no one's going to force me to do anything different, then in a time of stress and in a time of shock, that's actually the most dangerous zone to be in. It is a risk because you are not adaptable, you are not flexible, you are not willing to push yourself to learn or to take on something new or to react to that challenge. If you can push yourself into the next zone, which is your courage zone, as I've put there, that is building resilience within your business, whether that's that personal capital, whether it's restructuring your financial assets, whether that's thinking about other aspects of your business. You're building resilience, you're taking that step of courage, you're making your business stronger. Once you then get comfortable with that, though, you start to realize you're quite capable at that. That's where we can really enhance the revenue. That's where we can chase the profits, where by increasing turnover or reducing costs, we become more capable, we're adding better revenue streams or more resilient revenue streams into the business. And then surprise, surprise, once we've done that, we actually start being quite confident about it. That's where we can, if we go back to the first slide, really concentrate on the margin, not just always the yield, but enhancing that margin. We're really confident, we know what we're doing, we're thriving, we're pushing on towards being in the top 10, 25% of those businesses. And then before you know it, suddenly your new comfort zone is that confident zone anyway. So life should just be a series of going around that diagram there of those 4 different zones to make your business stronger as a result. And this is just really a summary of what I've been talking about, rather than just thinking, I know what the assets are within my business. I know what it means to be sustainable. Well, have you really thought about those technological assets? Have you really thought about the range of physical assets in your business? What about this focus on natural capital coming down the line? So sustainability is a lot more than just thinking, well, as long as I can pay the bills at the end of the day, that's sustainability, isn't it? But the key phrase there, manage change or be managed by it. We all want to be proactive rather than reactive. When we start seeing stuff like this, you know, NELMs and this phrase on public money for public goods, it's not something to be scared of or to think, I haven't got a clue, don't want to know about it, until we're forced to do it, we'll do it then. NELMs for me is about the industry defining what it wants out of that taxpayer support. We're going to have to do a much better job of justifying why we should receive that taxpayer money. Not just, here's holding my hand out, please pay me my £89 an acre subsidy, and simply because I own land, that's good enough. It's doing more than that and saying, look, you know, if we're in the Lake District or in one of those tourist areas, for example, we should be receiving that subsidy because that is a public good, that we are keeping the flora and fauna and environment in good natural condition. It's about saying our businesses are resilient. We're not reliant on the BPS subsidy to be viable and to sustain and to continue to exist. These grants are helping us around the edges do things better, be more efficient. So as I said, that money will still be there in the same proportion for the next 5 years, but it might just be in different pots. We've seen the agriculture bill obviously move forward from the House of Commons to the House of Lords in the past few days, and is hopefully on track to get royal assent and sign off over summer. That has already started saying there'll be more opportunities and more grants down the animal health and welfare pathway for productivity, for diversification, and perhaps also, you know, to continue down this theme of letting some of those older farmers retire, take that 7 year of BPS subsidy and roll it up front and create opportunities for younger and newer farmers to access the industry that way. NELMS is something to be excited about, not to be scared about, because if we will be forced to do it if we resist. So surely it's much better to be getting on board with some of these schemes and the rhetoric and the flavour that's coming out of them now, whilst it's within our power and it's still it's still voluntary, not mandatory. So my point earlier about the Countryside Stewardship Scheme, please do review that if you haven't previously, as there could be some good costs or expenditure on infrastructure items over the next few years you could get covered now. Just to wrap up then, about other factors that you also want to be clued up upon or certainly be thinking about at the moment, that might not suddenly come to mind. You know, ask your bank manager for a capital or an interest repayment holiday, or both. Again, if you don't ask the question, you're not going to know. Perhaps some of that debt you've got at the moment could go on interest only, you know, for a 12 or 24 month period. Perhaps you could have, instead of paying that monthly, perhaps pay it quarterly, or perhaps pay it in line with your business, you know, when it's receiving income or incurring particular costs throughout the year. What about a temporary overdraft increase instead, to help for the next 3 to 6 months? Again, same as saying about the bounce back loan though, these are not grants, they are extra debt, loans, refinance of existing debt. There has never been a cheaper time to fix and borrow money, certainly if we look back to the 80s and 90s, and also we've got the ability, as it says there, to go to our hire purchase providers as well and ask the same questions. But actually, you know, it's easy to ask the question, but probably the answer that's going to come back is, well, where's your business plan and where are your forecasts to support that? And that is well justified that would be the answer, because surely you yourself want to know what might be happening in your business over the next 1, 2, 3 years and how shocks are going to impact on that. And so that's all that the bank manager or the accountant or the other professional involved in your business wants as well, to be able to understand that if your business has to jump through different hoops or has other pressures put on it and it's stress tested, can it actually survive? Can it respond well enough? I've put there 3 key factors, certainly in my opinion, to appraise a business that I'm always looking at. The serviceability, obviously, can it repay the debt? Can it encompass that within your existing trading activity? The sensitivity, which is the stress testing. What happens if milk price drops? What happens if interest rates increase? What happens if the price of inputs increases by a certain amount? But probably more than anything, the sensibility. And this comes back to that Campari acronym of thinking about the character and the ability and the management. Does it sound sensible? Is it something that your business should be doing or taking on? Or is it really putting you at risk? And is it really outside the boundaries of what you could actually facilitate and manage within those assets of the business? So, you know, certainly if you've not started or thought about putting cash flows and budgets together, you know, it doesn't have to be an 80-page business plan. It could just be half a page as a motto, as a set of objectives, as a very simple cash flow analysis to understand the peaks and troughs of the year when you might be tight and close to your overdraft limit, or where you might have a bit more flex. And then also, if you've not already started doing, obviously try and benchmark where you can. If you can't, obviously there's no point doing it against a business that's completely different to yours. If you can find similar businesses, fantastic. If you want to kind of anonymize that a little bit more, perhaps go to the Farm Business Survey or AHDB and see what they've got, the Farm Bench programs, for example, or just simply look through some of your previous financial accounts to try and get an understanding of what an average year or a normal year for your business looks like and how you can benefit from that. So just finishing off then, some other factors, go back to those suppliers, review costs. It's not about suddenly dropping them or breaking those loyal or trusted relationships that you've had. It's asking the question, saying, how can we be more efficient? Perhaps could we buy in bulk, or could we buy in larger volumes, or could we stretch those payments out rather than paying for it in April? Can we pay for it over 4 months instead? That's going to help our cash flow. You know, could we ask for revised payment terms to pay over 60 or 90 days rather than 30? It might only be a very quick phone call, but it might help your cash position than if you hadn't have asked it and the business the other side of the table waiting for that invoice to be paid, thinking, bloody hell, why has this not been paid now? I really don't want to ring and chase because everyone's under pressure. Or it could be actually looking at doing something like a carbon audit on your farm. Again, something that might add value, premiums on your current contracts, being able to comply with certain terms, or hoops if you're on supermarket contracts, for example, that could help in terms of your audit trails and accessibility, assessing you know, the efficiency of your businesses. But also it might be something, again, looking down the line to NELMs, where these carbon audits and these land management frameworks are actually really essential to understanding how well your business is managed. Imagine if we could actually link those carbon audits and that carbon footprinting to a focus on business management, so we can think about profit and loss and we can think about viability, whilst also thinking about carbon footprinting as well. You know, understanding for every, you know, 10,000 litres of milk produced, or for every 10 tonne of silage produced, what is the carbon element of that, and can we put some metrics and better accountability around that, for example? Or it could be as simple as machinery sharing, buying inputs in bulk, or enhanced collaboration with some of your neighbours or other family members. There's no point 3 or 4 of you sitting there suffering all at the same time, when actually if you club together and maybe just, you know, spoke and were happy to share a little bit more information, you could all benefit from that. And then also, you know, a little bit of a plug, you know, not just, you know, using a consultant or a land agent or a valuer or an accountant for the sake of it, but asking them to play devil's advocate, asking them to be the independent person, asking the difficult questions, and offering a different opinion into your business. So if we can do all of that, we're then moving forwards round from the plan to the do, to the check, to the act part of this continuous improvement circle. If anything gets stress tested, if anything changes, we can just feed back in and react at the time. But otherwise, we should always be trying to move around, again, from the risk to the resilience to the reward aspect of it as well. So here we go, just to summarise, there are a wide range of grants and funding available, and perhaps some that you haven't already been made aware of. Really, though, you want to be assessing the existing business viability and the need for accessing any of that funding before you decide to jump in. A loan is definitely not a grant. It does need to be repaid at some point. You really want to give the courtesy to any of your existing relationships with those professionals to see their opinion, or to give them a heads up as well. You want to be thinking beyond these next 6 to 12 months. What opportunities might there be from the Agriculture Bill and NELMs? Think about some of these personal development courses to help you in terms of management or leadership, or your structure in assessing and leading and driving forward your business there. There's no better time than to make that plan now. You know, a blank sheet of paper, a blank spreadsheet is the absolute worst. Start putting some figures and some pointers down to start being able to put a mantra or a set of objectives in place that you can then monitor and perform against. And just try and be more savvy about tapping into these funds, so you're thinking about outcomes and not always the outputs, so to speak. You're being more objective. So sorry for going over by a few minutes, but thank you, Emily, for the opportunity to go through those slides. And obviously, if there's any questions, I'd be more than happy to try and answer some of them.